So thank you all. So I've got a question about cloud adoption in banking in the MENA region specifically. So historically, most cloud adoption is in consumer goods, retail, e-commerce, and internet companies.
I cannot hear you clearly, sorry.
I'm going to say that again.
Speakers are this way, so that's why. Can you please speak a little bit louder?
Certainly. So great talk for a start. Thank you. My question is about cloud adoption in banking in the MENA region specifically. Historically, most cloud adoption has been in e-commerce or technology focused. Banking has always had regulatory challenges. So today, in terms of market share, how many banks or percentage of banks in this region do you think are moving or already moved into cloud versus on-premise today?
Okay, good question. Of course, private cloud is the one key thing that they start with. So I'll clarify it this way. Each country has central banks is mandating differently on a cloud technologies, right? In some countries, they are not even allowing to touch the public cloud. They say keep everything on your prem. And in some countries, they say, okay, you can utilize the cloud services, such as UAE Central Bank deployed the outsourcing compliance for the banks, but it has to be in the country. So when banks are thinking of moving into public cloud or utilizing the public cloud, of course, the first thing they see which cloud providers are in country and how can you make sure that my data is not moved on to another country. So percentage-wise, it's the first wave already started for building a private cloud for the banks, right? So we can say maybe touching to the 50% region, but for public cloud, yes, there are the leaders of banks are right now doing it. They are of course trying to taste it and understand it, and maybe they try it. Sometimes it slows the business down, and they come back. So these kind of mechanisms that they are trying right now. So, but it is at the leader side, not went down to the all banks, of course. Yes. Any other question? So if there is not, thank you very much again.
Mr. Ismail, thank you so much for that very insightful presentation and the certificate of appreciation.
Thank you, dear.
Thank you.
All right.
All right. Next up, we have the regional financial leaders' perspective on the evolution of banking. I have two guests to welcome. First is Mr. Wilcox, who is CEO of HSBC Egypt. He was appointed to the CEO role effective July 2020, and he has a number of years of experience in the industry, including previously the Chief Risk Officer for Asia Pacific for HSBC, overseeing 11 markets in the region. Joining him will be Dr. Bernd van Linder, CEO of Commercial Bank of Dubai. He has been CEO since January 2017, and he too has many years in the industry. This includes setting a path to being a completely digital bank. Please welcome both of them to the stage. I will be moderating this, and we will start off with some questions for the two CEOs, and then we will open up, time permitting, questions from the audience. Thank you. Thank you both so much for joining us today. We're very excited to hear from the two of you in terms of your perspectives for the future banks. I'm going to start off with a question for Mr. Wilcox, and then if Dr. Berndt, if you'd like to also opine upon this, this would be fantastic. So, leading from the heart and translating corporate purpose into action. How do you do that?
I kept expecting a tech question. Now I'm not prepared. Boy, leading from the heart. So the COVID experience has been an interesting one through this, because to keep the whole team engaged. And I went to Egypt a year and a half ago. We've got 1,500 people in the bank, 1,500 people at our global service center that services a number of different countries. And I think what we've done a good job of, and specifically, Egypt is changing quite quickly. It's 100 million people. The average age is 25. We're the largest foreign bank there by some margin. And we've got a great market position. We bank large corporates, many of the multinationals. We also bank retail. And I think what we've really focused on is the opportunity and have a very clear strategy. And part of our strategy is combined of bringing new multinationals in, technology, so fintech, we're working with fintech, and on the ESG agenda that we were just speaking of earlier. And I think by having that clear agenda and that clear strategy, and specifically through COVID, has enabled everyone to stay connected and linked in. And what we've really been focused on is sharing success as we go. So everyone has a very clear view of what our dashboard looks like, what our metrics are, and it's shown that the Egyptian team can really move the business dramatically.
Thank you. I agree with Todd that a technical question would probably have been a lot easier. If I can add to what he was saying, I think the key for us has been to try and define a purpose for your people. And it has to be more than just shareholder management. It has to be more than financial metrics. You have to somehow define a purpose for your colleagues, for the people that you work with. And it's great that the bank is doing well. It's great that the bank is doing financially well. It's great that the shareholders are happy, but that doesn't automatically translate into the people in the bank being happy. And one of the things we've been doing over the past year and a half is define a purpose for the bank that links the purpose to our clients with the purpose for our employees, and really try to align all of them behind a common purpose, which we defined as backing your ambition. We back the ambition of our customers, we back the ambition of our staff as well, and whatever we do in a bank, we try to fit into that framework. And again, to me, the key is to make it much broader than just the financial performance, because I don't think anybody, or at least not too many of my colleagues, will get out of bed in the morning thinking, let's add some shareholder value today. Let's make sure that we pay more dividend to our shareholders. People are clearly motivated by something else, and that's what we try to define or to grasp with our corporate purpose.
Thank you. Moving on to our second question, Dr. Berndt. From transition to transformation, what's next for regional bank innovation strategies?
Yep. When I look at ourselves, when I look at the digital journey that we've been through as a bank over the past couple of years, I would say that on the retail side, we're almost there. The way that I like to think of it is sort of a matrix with 4 boxes. On one axis, you have retail versus wholesale, and on the other axis, you have front-end only versus end-to-end. When I look at retail front is done. Any improvement now to me is sort of marginal. It's still important and we will keep on doing it, but the big steps have been made. Retail front to back or end to end, we've made massive progress and we're much better than we used to be. There's still some efficiencies to be gained. There's still something to be gained in terms of customer experience, but again, I don't think it will be truly transformational anymore. I think that has happened already. When we move to the wholesale banking space, I think it's a completely different situation. Sure, there are wholesale front-end applications. There is some digital offering that we have, that other banks have. There's not a lot in terms of wholesale end-to-end or front-to-back. And that's clearly something that we need to do more on. It's clearly something that's important to our customers as well. Our customers tell us we want to be able to do things digital for our companies as well. We want to be able to do it on our mobile. Come with a fully fledged, fully functional mobile offering. As I said, we're not there yet, but this has been the main focus of us over the past year or so and will continue to be the primary focus for this year and the next one.
I think Egypt's in a bit of a different situation. So as I was saying, a population of 100 million, the average age is 25. 95% of the population have a mobile. And I'm going to compare where they're at to where I used to live. So I lived in China for a number of years. And just to give you a bit of an example, so my wife and I would always go Saturday morning, we'd go buy breakfast at a stall out on the street, jinbang, which is the giant Chinese pancakes. And you had to have exact change and put it in a basket that this very elderly lady had, and she'd serve you the jinbang. And she, very popular, was always selling out. When I got there, it was all through exact change into the basket. When I left 3 years later, you paid by WeChat. And everybody, she no longer accepted cash. And she was a very elderly lady. And you'd scan the QR code, there'd be a bell would go off in her shop, and the money would be in her WeChat account. And it was transformational because she was also paying her suppliers on the same account. And there was no more cash. So in Shanghai, I rarely carried cash with me, and people rarely accepted cash for payment. If you go to Egypt, so it happens in China, 90% of the transactions are done through Ali or Tenpay, WeChat. And they actually started shutting out the banks a little bit. We were no longer part of the transaction game. In Egypt, it's still cash-based, and you don't have that mobile wallet acceptance yet, and the culture is very much on cash. But it's so young, I think it's going to shift dramatically. And what will be important is that the banks don't give way to the Egyptian version of Tenpay or Ali, because once you do that, Tenpay starts getting all that data, as you guys would know, on that client, and they start becoming a bank. And they were starting to marginalize us. So for me, that revolution in Egypt is still to come, and it's something that we need to be in front of.
Excellent answer there. Moving to the next question, Mr. Wilcox, repurposing digital transformation, is it just about technology or the people that banks serve and lead?
Boy, I think it is more than the technology, and I think it's about our clients' expectations and our capabilities. And when I look, and we're working quite heavily in the fintech sector, because we're seeing from a few different standpoints. One is that Egypt is the second largest source of venture capital funds going into fintech in the region. It's starting to rival UAE, actually. And if you look at some of the very successful fintechs that are developing, many of them are Egyptian-based. And Egypt is a good site for fintech because it's a good platform. It's a large population. The cost of developing is low. And also, it's a good expansion base for Africa and the Middle East. What we're doing is very much looking at who we can partner with. And if we're going to partner with a fintech company, we're going to start investing with them. So what is starting to happen is we'll take an equity position in the company, because having HSBC as your client gives them an immediate boost. So the marketability goes up. So we see, let's get in on the upside. So for us, it's working with the tech companies, but that means we've got to build the skill of our people. And our staff. So we've got a number of our staff really trying to increase their knowledge of the tech sector and the business side of it, because we also see great business opportunities for banking many of these companies. On the client side, I think the client utilization and demand is faster than we anticipated. So right now, during COVID, certainly we saw a significant increase in the number of transactions that were done electronically. Globally, 96% of transactions in HSBC are done electronically. Egypt is at 90%, so it's high, but there's a lot farther to go. I think, again, the clients are going to start to move quite quickly, and as they start getting used to not using cash, not coming into the branches, and that certainly happened through COVID, I think that the transformation is in motion.
Many years ago, I was a technologist myself. I actually did a master's in computer science, and my PhD is in artificial intelligence before I went into banking. And to me, the answer to your question is very, very clear. It's always about people. It's always about people. Technology is an enabler. when used in the right way, can give enormous benefit to the organization, to the customer experience, to your people, to your clients, but it's never more than that. If you don't have the right people to make the technology work, and that's the right people on the business side, the right people on the IT side, making sure that they work as one team, then it's never going to work. I'm a firm believer in that. I think, in a sense, banking is special as well. Banking is a utility. I've used the example before, but I never met anyone in my 25 years in banking who said, hey, let's go to a bank tomorrow. Yeah, let's have a good time. I'm going to visit a bank branch. It doesn't happen. It's people like to go shopping or like to go to a bookstore or a record store in the old days. Nobody likes to go to a bank. So if we can make the banking experience as painless as possible, as frictionless as possible, then we've already done a very good job. And that's where I think technology has to play a very important role. But again, it starts with people defining what painless is and what frictionless is. So it starts and ends with people.
Excellent, excellent. Next question, Dr. Berndt. How are banks co-working with fintechs and digital payment services?
Yeah, I think Todd already hinted at how I think it's supposed to be done. We're trying to do the same thing. Of course, we're not HSBC, we're the Commercial Bank of Dubai, but even in our case, if we work with a fintech and if we get an application to work in a real environment, in a live environment with lots of clients, with a regulator looking over your shoulder, then that's a big thing for a fintech. So we set out to work with fintechs. It's collaboration, it's not competition. To me, fintechs are not competition at all. It's a group of companies that we work with. We've done some interesting work on the remittance side with Now Money, a fintech company based in Dubai. We launched the first robo-advisory with a fintech from Belgium, InvestSuite. And in both cases, these companies added something to us that we didn't have ourselves. The agile way of working, the focus on going live quickly, on having MVPs rather than a fully fledged, fully finalized product, that really added value to us. I think the value that we added to them is, of course, our customer base, is the trust our customers have in us, because after all, it's still banking, we deal with people's money, and the fact that we operate in a strictly regulated environment. So it's clear on both sides, there's lots of value to be gained, and if you get it done in the right way, then I'm convinced it's successful for both parties.
Yeah, boy, I would echo that. And to give you an example, we're currently working with a firm that does supply chain financing, and that we can fund the suppliers of our big multinational companies through their technology. And it's been a really fruitful collaboration. So it enables us to extend our services into areas we wouldn't typically do. And the cost of development is significantly less. And they're free to take on other clients. But again, as I was saying, having us as a client gives them a real boost and gives them much of the lift that they're looking for. And also, I echo the comment that we can help them on the regulatory front, because for many of these companies, they're not used to having to navigate bank regulators. And the one company we're working with on supply chain, it's taking some time to get them through the regulator. And they've been quite frustrated, but that's the nature of the regulation. So we've had to coach and coax them through it. So I think it helps both parties, and I look forward to seeing more of this.
Excellent, thank you. Next question, Mr. Wilcox. Digital is becoming mainstream. What measures your team is making for the best customer experience?
So for us, again, working, it's been interesting, working with the fintech companies as well in this regard, because they tend to be, in many ways, they tend to be more agile and closer to the client experience than we are. And primarily because our systems, our IT core systems, are a little bit rigid. right, and not as flexible as they need to be, and not meeting all the client experience expectations any longer. So the fintech companies as well has given us some of that capability. I would say on the client experience as well, the 75% of our clients touch their mobile phone weekly, right, that they're using to do banking on the phone. So having that platform be as, I guess, as user-friendly as possible is a key thing. So we're investing quite heavily in that platform. We've also been rolling out some internal systems. So our trade systems have been improved considerably. Our online banking and net systems have been improved considerably. So we do measure our net promoter scores. We get on a monthly basis to see the people that use the mobile banking tend to have higher net promoter scores than the people that use traditional banking. So it's well worth it to try to get people onto that platform. They just have a better experience.
Yeah, I think on the last part, to be honest, it's probably because people on a digital platform don't have to deal with the bank. That's the reason that they're more happy or more satisfied. But setting that aside, I think the key is to co-create. The digital user experience has to be owned by the business. It has to be a co-production of business and IT, and preferably of business, IT, and customers as well. If you can do co-creation with your customers involved, that's absolutely ideal. Customer-centric design and development, I mean, the term is probably, I don't know, 40 years old, but it's crucial today to get it right. And I think agile development, focus on MVPs, get an MVP out quickly, measure the customer feedback, take immediate action on the feedback that you get. That, to me, is the key of getting your user experience right. And by the way, we also see it, our NPS is highest on the digital channels and by quite some margin.
Excellent. Dr. Berndt, next question for you. This goes back to your AI background too. How is AI going to play its role in the future of banking?
So, well, my AI knowledge is, of course, completely outdated, going back to the mid-90s. But what is interesting is the research we were doing in those days, the fundamentals, in a way, haven't changed too much. What has changed in the past, what is it, almost 30 years, is that the technology has become so much better and so much faster. So I think that the fundamentals behind machine learning, because essentially what we call AI, or at least most of the successful applications of AI that I know are machine learning, the fundamentals are the same. They haven't changed in 30 years, but the hardware has become a lot better. And what machine learning is very good at is pattern recognition. So if you look for successful applications of AI in finance, most of the ones that I've seen, the ones that we use in the bank as well, is recognizing patterns. Transaction monitoring, looking for fraud patterns or looking for compliance issues in transactions. AI, machine learning is very, very good at that. More individualized marketing. Again, you can imagine, we're not doing it today, but you can imagine that using machine learning, your marketing can become better and more individualized. Portfolio management on the asset management side. Again, machine learning could help. I'm not saying that machine learning can help to predict the stock market, because I'm too much of a believer in the efficient market hypotheses, but I can foresee AI to assist in portfolio management decisions. So areas where you have a pattern, where there is room for a pattern to be recognized, for a machine to learn from pattern recognition, that's where I see AI applications now and going forward.
Yeah, there's two areas that I see immediate benefit and that we're experiencing right now. One is on the transaction monitoring. And because globally we go through 700 million transactions a month, right? And it's 240 million clients. And to be able to sweep through that transaction base with any confidence, we can't do it without AI. And it's getting more and more sophisticated. And we've really tried to focus as well on reducing the quantity of hits, but the quality to go up, mainly because we don't want to delay payments for clients. And AI really has made some material changes, even in our business in Egypt, to really speed up transaction processing and increase our our confidence and quality. The other that is really starting to emerge now is a bit on the robo-advisor side, and how do you improve your customer service using that tool, but also looking at financial advice, and how do you start using a bit of robo-advisor to get people some financial advice, and it takes you to more of a mass market wealth offering. So those are the two areas where I see some real opportunity, but we're also seeing in our trade documents the opportunity for AI, and that would help considerably, because those tend to be quite labor intensive. So again, it's that, what I'm learning in the bank is that little bit of experience and education and a successful implementation leads to other ideas which lead to the same. So.
Thank you. Next question, Mr. Wilcox. Cybersecurity, that'll be a top concern for banks in the future. What modules will be followed for governance, and who should have final authority in terms of regulating governance?
Oh boy. Well, the final authority tends to be the regulator, right? And that very much, it was interesting hearing the discussion on cloud, because certainly the regulators are looking at cloud as being a potential point of vulnerability for us. And they don't necessarily want the data to be leaving the country. So you've got the regulators now becoming much more hands-on in this regard. And I saw it absolutely in China, but I'm now seeing it in other countries start to emerge. The ownership of the risk very much sits with the executive of the bank. And we run a risk committee. Cybersecurity is on our risk committee. We look at it globally because we're a multinational, but we also look at it locally. And cybersecurity from two standpoints. One is our security in the bank, because it'd be catastrophic if we had a security breach. And this is something that we take very seriously. What I'm learning is that it's been in, we categorize everything into be green, amber, or red status. It feels to me like cybersecurity is always somewhere between red and amber. I ask my chief risk officer and my chief operating officer every month about what can we do to bring this from amber to green, and the answer is we'll never get there, because it's evolving so rapidly that we'll always be in this state of high alert. And that's something that, again, we look at globally and at the country level, but it very much sits with the risk committee and the executive. The other side of cybersecurity for us is the security of our client base. And as I was saying, that we go through hundreds of millions of transactions a month. We've got a screen for that, for unusual patterns. That's where AIs come in, so we can identify fraud happening to a client potentially before they understand they've been frauded. And we've had some good success there. The other is just the emergence of biometrics and tools for identification, and that has jumped considerably. We're looking at software right now that will recognize the client by how they handle their mobile phone, right? This is a fintech that we're working with. So some real new technology.
I agree with Todd. It probably at best will be amber. It has been one of the top 5 risks for the bank since I joined. It's discussed at a board level. So in that sense, with us, it goes above management. It's one of the top 5 risks our board risk committee looks at. And I think it will stay there. It's an area where I do think banks can do more together. We started to do it in the UAE with the Banking Federation, but it's not an area where banks should compete. If we know something, if we spot something, we should share it with all of the other banks, and likewise. Because it's really an area where all of us together are much stronger than the individual banks, and perhaps we can prevent some of the bad guys from playing off one bank against the other. So clearly, going up all the way to the board. One comment on the cloud, because I think I'm less worried about cloud technology from a security perspective. Probably more worried about it still from a performance perspective. I somehow still cannot see, despite what the previous gentleman said, my core banking system running on a cloud. But it's more performance or concerns for performance than concerns for security, because I do believe that if you look at the way this cloud technology is set up and the way that the data centers are set up, it's probably much better than we are able to do ourselves. So from a security perspective, less concerned than from a performance perspective. And I hope I'm wrong on the second one as well, by the way.
Thank you. One more question for the two of you, and then we'll open it up to questions from the audience. COVID-19, how has that affected trends in the industry, trends for your bank? What do you see happening going forward?
Yeah, I think as Todd was saying, probably the best thing that came out of COVID was the fact how the bank pulled together. And that in the middle of a lockdown at some stage where we had all of our people work from home, we had all of our colleagues in India working from their homes as well, and we were still able to provide the service to our clients that we had to. I think that was extremely impressive, and I was really very, very proud of our team. In terms of trends, I'm not sure if it changed trends, but it definitely accelerated them. So we were already high 80s, high 90s when it came to electronic transaction. That went to 96, 97, 98%. I think our clients saw what they could do without having to physically visit a branch, and that sort of changed their way of working as well. So the whole digitization, I believe, is irreversible. I'm not saying that there will be no bank branches, because I also firmly believe that bank branches are there to stay, but the bulk of the transactions, the bulk of all of the sort of day-to-day transactions will be done digitally and will be done mobile first. I think that's a given. That's not going to change. I think the way of working, the working from home, the fact that our people saw that they can work from home, certain functions in the bank will continue to work from home for some time, that also I believe is irreversible. We still have 70, 80, 90% of the people in the bank, but we will have some of our colleagues working from home at any given point in time as well. So those two, both our staff, our employees, and our clients seeing that they could do things from home using digital technology, the acceleration that we've seen, that I would say is the bigger thing that came out of COVID.
Yeah, I totally agree. It was a rapid acceleration, and we saw some real benefits from it that were a bit surprising for me and that I didn't anticipate. So we put 90% of our head office was in work from home, and half the service center, so our global service center that does the back office processing for a number of countries, was work from home. And what was interesting at the service centers, productivity went up. So people working from home, and we were well placed to work from home because we do contingency planning in case of emergencies and so on, and Cairo can be a bit chaotic. So we're better prepared than many banks to be able to put everyone at home. We had access to the technology to do that. The other benefits that we saw was that the operating losses went down. So as clients started shifting to straight-through processing and electronic payments, the number of manual transactions went down, and our op losses were at a record low through COVID. So it does show that in addition to the clients shifting to that platform, we saw some immediate benefits.
Thank you both. Now there's time for questions from the audience. Just raise your hand. Just one moment for the mic.
Hi, good morning. This is Hamid from Emirates NBD. I would like to ask Todd about one question regarding Egypt banking section. I understand that the financial inclusion is starting to take place very well during last 2 years, but as I am Egyptian and I already going to Egypt in frequent basis, I don't feel it. It's there. Cash base is still dominating the business, dominating the transaction, and the card usage is very, very limited, especially for population. We're talking here about 100 million. How can the bank overcome this one? Because now the financial inclusion is there. There is a section in each bank, but in the market, there is no much reflection.
Yeah, so financial inclusion is taking longer than I anticipated in Egypt. And the mobile wallets launched 2.5, 3 years ago. But the uptake has been slow, and there hasn't been that one killer application to come out yet, but I think it will come. So Egypt hasn't had its WeChat or its Alipay emerge yet. So the mobile phone uptake, and the mobile wallet uptake has been surprisingly low from what I've seen, considering the population age and tech savviness. I think it's going to take that application to really trigger it. We're a mobile wallet. We don't provide mobile wallets, but we're a collector for mobile wallets. So we make sure that our clients, our big corporates, the supermarkets and so on, can accept it. We've been partnering a lot with Vodafone because they are a wallet provider to see what we can do to drive that usage up. But that's the piece that's missing. There's an opportunity there for one tech company to do mobile wallet with something else. And if you think about WeChat was very much chat first and then pay. And I think that we'll look for the tech company that launches that, and then I think Egypt will take off.
Thank you very much.
Next question, please.
Gentlemen, thanks very much for your time this morning. I've worked in Egypt and I've worked in the Middle East for many years. And just to pick up on your point there was an article recently, I think yesterday, from the Central Bank of Egypt talking about how they're working with 112 fintechs. So I think it's a slow burner in Egypt, and then obviously it'll hit a tipping point. Where I wanted to ask both you gentlemen is, I used to run a retail bank in Kuwait. And one of the things that I was constantly battling with was training and development of future talent. One of the areas that concerns me in our passion to go digital and in our passion to become user experience focused, we're losing sight of developing the future leaders. Everybody seems to want to go on a Harvard course and learn about case studies of Southwestern Airlines, etc. But I never see any training in the hard practicalities of attending an ALCO or attending a board risk committee meeting. You know, real things that you actually need on the job. And in a region where we're very focused on nationalisation and supporting the future leaders, I just don't see enough there. I mean, in fact, I was talking to the Egyptian Banking Institute last week, and that was top of their agenda for the middle managers, tomorrow's leaders. Can I ask you both, you know, what do you do in your own organisations to ensure that you're actually giving that hands-on practical experience? Because the danger is, in our passion to become tech-focused, we forget what we actually are, which is still a bank, and we still have to manage a balance sheet, and we still have to manage a profit and loss, and we still have to manage liquidity ratios, etc. So I'd be interested to get your views on how you develop that.
I think you make an extremely good point. Banking is all about people. It's a completely commoditized industry. All projects are completely fungible because it's all about, so in the end, it's all about having and retaining the right people. What we try to do is, like most of the banks, we have a graduate trainee program. So we get fresh graduates in, we train them to be bankers. We hope to stay with us. What we've been doing over the last couple of years is expand that with the next generation leadership program, both from people outside and people from within the bank, where we take people who are middle management or just below and give them the training they require to make the step up to become the leaders of the future. Is there more that we should be doing? For sure. I fully agree with you. I hadn't even thought about things like teaching people how an ALCO functions or a board risk committee. It's on top of my agenda. It's on top of our board's agenda as well. And like in Egypt, it's on top of the regulator.
3,000 staff, as I was saying, really strong, and the executive level is extremely strong. Well, tons of experience, but that next layer down, that next generation, we're not getting the right exposure to them on the basics of banking. So we've very much focused now on success. Recently, we had a vacancy in the risk team, and I wanted to get some people, one of the relationship managers from commercial markets, to go over to risk. That moving to risk for 2 years was good for his career, because people think very linearly, and especially in Egypt, they've got a very straight career path, and we haven't done the succession planning, talent planning we've needed to do in the past. So there's a bit of focus and a bit of energy to make sure that that next generation is getting the basics. The other thing we do is called the Future Skills Program. So we do look at what we'll need 5 years from now, and what are the skills. So one of the areas that we're very much focused on is on the ESG sustainability agenda, and that our relationship managers start to be able to talk that language and understand what that looks like and how training modules. So we work with the Banking Institute in Egypt a fair bit, and we work with Cambridge Risk in the UK for some online training, but it's very much looking at what we need 5 years from now and making sure that we've got the right skills in the team.
Time for one last question, if there is one.
Hi, Glenn Fernandez from Bank of New York Mellon. Just a question for both of you, is, as you talked about collaboration, particularly Dr. Bernd, around with fintechs and what we're trying to do as bank become more utilities and regulated as the regulated entities, is how do you look at codependencies, right? Like, so I think recently in the press we've seen a lot of this stuff where Apple changes its privacy and it hit the market with $240 billion of losses with codependencies on other companies like Amazon. Talk about collaboration when you talk somewhere else, because now you're codependent outside your ecosystem.
It's a very good question. What we do with all the... So in that sense, I'm not sure if the term codependency is right for the relationship we have with our fintechs. It's more like a full integration. What the fintechs are doing for us, outsource some part of the and we have made sure that the processes that we have, the controls that we have in place, the way that our technology works is such that whatever the...
Yeah, we've very much taken it into our risk processes. So we do need to watch those connections on an ongoing basis. We need to test them. There's a formal review done once a year to make sure that things are working the way transaction companies. So it just means really upping your risk assessment and your ongoing risk assessment. And as I was saying, for some of those companies, take a position as well, which gives us some insight and control and say on the direction of the company.
Dr. Bernd and Mr. Wilcox, thank you very much for your wonderful participation here and insightful answers. There is a certificate of appreciation for each of you. Thank you. Cool. Thank you. Yep. Thank you. All right, up next we have another interest. I would like to invite Mr. Sachin Bhatia, who is founder and CEO of Ameo India. Mr. Bhatia was instrumental in the merger of Ameo with Exotel, Asia's largest cloud communication platform, and the acquisition of Cogno AI, a conversational AI platform to create the first AI-powered cloud customer engagement platform for emerging markets. Mr. Bhatia, welcome.
Thank you, David. Can you hear me? Thank you, David.
Thank you.
Before I go into my slides, I was listening to Todd and Bernard. Okay, a quick show of hands, because the last two sessions there was a topic and it got me thinking. By the way, I'm an engineer and a product guy, so I switch things in real time. How many of you believe that 70% of the applications, even in banks, would be running on cloud in next 5 years? Next 10 years? Next 2 years? Yeah? So if you look around, 2 years was about 15, 20%. Next 5 years was about 50, 60%. And 10 years was 70%. I don't know what other guys are still thinking, but that's your market size for the guys at Huawei. Okay, second question. How many of you use some form of AI today in your organizations? How many of you are looking at something in AI? So about 20% people doing something and 15% looking for something in AI. By the way, that has got nothing to do with the product that I sell. This is just out of curiosity. I did a session By the way, thanks to the session organizers, right? It is good to be out of homes. The energy of meeting people is just fantastic. So thanks for organizing this. When I went and addressed about 50 CIOs of banks, and I told them that every time I go into a bank, people ask me, what do you have in AI? And that's a bad starter of a conversation for me, because the problem has to come before the solution. So I asked them, why do you need to do anything in AI? Is there a problem that you're trying to address, whether it's reducing cost of service, whether it's increasing conversion rates? If you're doing collections, are you planning to increase collections rates or collection velocity? Tell me a problem, and then I'll tell you that what can happen in AI. But there are 2-3 trends that all of us have seen very, very clearly. First is you can now process a large amount of data, run it through a machine learning algorithm, and learn something from it. That's just a how, right? That's still not a why. So the why has to be identified first, that what problem are we solving? Then does that require a large amount of data processing? And then what insights can we drive? The other thing, my kids speak to Alexa and Google better than me. And hence the speech technologies that we see in the market, they're becoming extremely mature and ubiquitous, right? My dad has started chatting with bots. So those are trends that we see on the consumer side, and if we can use them in some of the applications that we are doing, it'll be good. Anyways, I wanted to just share this. Is there a clicker? So on AI, one insight is start with why and not what and how. That sort of helps a lot. Okay, let me see how it works. Yeah, okay, I got it. Thanks. So there was a discussion on what changed in pandemic, and it changed. Boy, it changed. I took my first ATM cash as I landed at the airport in last 2 years. So a lot has changed in the pandemic, by the way. Of the last 2 years was all hybrid. Some of it was on-prem, some of it was remote. And this is not going to go back. Even if the pandemic goes out, I think the reasons would be flexibility on the workforce, cost advantage. Our customers are now used, and I'm using the word use loosely, addicted to new channels. So you can't have them go back into a branch, or you can't have a relationship manager visit. If some of you have seen relationship managers in the field, that is going to change, because those relationships will now be managed on WhatsApp in real time and not face-to-face. So WhatsApp, voice, chat, SMS, and somewhere down the line would be face-to-face when it's an extremely emotionally charged situation. When stakes are very high, that is when face-to-face is going to happen. And the last, there are some trends that have caught up in the last 2 years. Voice AI, machine learning is the first trend. Clear understanding of intent from natural language, thanks to what Google has been doing, what Amazon has been doing, and what data is now available in open domain. You can actually, from phrases, start understanding a lot of data. What kind of profile does Sachin belong to? What kind of people should serve Sachin? Will all be modeled very, very quickly. Those are technology trends. By the way, these are not problems. These are just technology trends. We still have to identify what problem can we now solve because of these breakthrough trends. So today we're going to talk about 2 problems, especially in remote business. You might be selling to retail, you might be selling high net worth individual services, you might be selling trading services, but in a remote scenario, hard work, you might be. A few years back, when my dad went to a bank branch, and banks were famous for these forms, right? So as soon as you get a form, you need somebody to help you fill that form. The word, because my dad still requires that assistance. So usually are extremely complicated, and that would mean that there is a drop-off. So that's the first problem we're going to talk about today. The opportunities are the KYC, or the initial process, the sale has been made, the there is actually today very limited assistance that you can offer, right? So you can write an email, but it takes you out of the form. You can get into a chat, but that also takes you out of the form. So there's text, they're really good at it. They're really good at user experience and customer experience, so you don't want a drop-off to happen. Let's look at the second problem we're going to talk about today, which is service. And there is a human agent it's very human. So if people are on mobile, I start looking for a loan at 10 p.m. in the night and that. And finally, how do you avoid human errors there? Right? Humans will still make errors. How would you avoid? So those are the two problems that we're going to talk about. There are a lot of things that we do, but we're going to only focus on these two problems today. Let's look at the first problem. This is how a typical form looks like. I think this is for insurance or mutual funds, a wealth management fund. There are so many options. Especially, for example, scheme category. Now, how does my dad know corporate bond fund versus credit risk fund, which one should he take? Should he have researched all this? He just instinctively thought he wants to invest $2,000, and now he has this forms. So what do? We have a solution for this. It's called co-browse and live chat, which means while from within the app, live agent assist the form is filled, or the agent could assist completely securely. So the person is filling a form. And the agent could be chatting at the same time, right? So the chances of the drop-off, the complex form, are near zero. We have seen, and I'll present one small case study here. By the way, you could also collect documents. That's another popular example of an insurance company where a form was done. So with this specific use case, company, Bajaj and Allianz have joined. There was a 15% increase in first-time conversion. That's immediate top-line advantage, immediate speed of deployment advantage. Average session duration was 10 minutes. So people were able to go through this whole process of filling up a form and getting onboarded in 10 minutes. All this data was quantifiable and measured as a KPI during the project. Actually, there's a video. I don't know how to play that. If you have a control, this is a 90-second video. Can just somebody click on this and play that? Just click on the center of the slide and it'll play. Okay, I'll wait for 5 more seconds. Otherwise, the customer experience is getting ruined. We'll show it at the booth. On a mobile app or a website, and what's the whole experience for the customer? And they see the mouse being moved by the agent on their side, each of the field being explained, but the data is masked, right? So that is what live form assistance is. Let's talk about the second problem. It's okay, guys. Thanks. Can we move back to my clicker? Okay. So let's talk about the second problem. The second problem is around any sort of post-sales service. And one of the interesting use cases I'm going to talk about a little bit on loan recovery, but there are a few more use cases around omnichannel support. So we already know the benefits. This is round the clock. You could actually, in one of the projects, and most of the customer service support lands up on an IVR, you could do 65% deflection for routine customers, which means that you don't need to take that IVR call to an agent, which is the most expensive customer service channel. You could deflect from IVR to WhatsApp, right? So if you're experiencing, for example, you could start with, if you're experiencing extremely heavy traffic on the contact center, in the IVR itself, send a WhatsApp link to start a conversation on WhatsApp. And that's 1/6, 1/7, sometimes 1/10 the price, right? So you could start with small experiments, and I can tell you that somebody mentioned people are opening mobile app or a banking app once a week. Do you know how many times people open WhatsApp? 30 times a day, right? So the chances of engagement are like, I don't know, 100x better in a week, right? So if you could start engaging on WhatsApp, and there's a trick on doing that, and I'll share that, right? So this is not how a typical, if you want to serve your customers on WhatsApp, what is the hook? Notification. As soon as there's a WhatsApp notification, our brain tells us that we need to check what is happening. So for example, if a loan is due, if a transaction has processed anything which is a moment of truth, share it on WhatsApp as a notification and allow the customer to respond to it on a separate channel, right? So you could seamlessly integrate WhatsApp into your workflow. Imagine that you send, all of us send essence required, we can chat right now. The chances of that engagement is many, many times higher than you trying to then, after a 1 month bucket, trying to to an outbound process. So anyways, those are some of the learnings. The bot could now understand multiple languages. We've done implementation in Hindi, English, and Arabic in the region. So you could have use case by use case implementation on the bot with WhatsApp. Here is one example of the kind of menus that are possible. So somebody was talking about the killer app. The killer app is already out there. You don't try and replace WhatsApp in people's heads. You try and use that engagement, use those 30 times a day engagement, and get your workflows within WhatsApp. That's how we see the future, right? So yes, you would still require a website. Yes, you would still require a mobile app. But sooner or later, your customers are going to go into channels that they usually open. And I don't need to be that killer app. The killer app is out there. Question is, can I be the part of the workflow? The same bot, by the way, is also, you can embed your app, you can now embed into your website and on WhatsApp. And all these channels are offering one seamless experience to your end customer service. Okay, just one slide on the kind of stuff that Ameo and Exotel are trying to solve. We are a cloud customer engagement platform. We believe that the function by function, roles will become digital in a bank or any large enterprise. So we look at sales, service, relationship, collections, and then fulfillment. Fulfillment, if some of you would have used applications like Zomato or Careem, where there is a call driver or a call restaurant kind of button. All this is already out of office, and all this is going to happen on cloud first. We see the second function moving to cloud, which is the conversational AI, conversational intelligence. All this data can be on cloud. We see the third function moving, which is relationship management. So we've already seen in very, very large banks, high net worth individuals, there is a place for what is called a relationship manager. I have a relationship manager with all the banks. They earlier used to visit me, but now they WhatsApp me. Now, do you want this WhatsApp to be their own WhatsApp, or you want this to be a bank's WhatsApp? It's official communication. So it has to be monitored, it has to be managed. It's going to be replaced by a simple widget, which you can now get in touch with your customer on call, on WhatsApp, on chat, 1:1, everything monitored and managed. Voice, same agent doing most of the things, and a bot layered at the center across channels, right? So you would have a voice bot or a chat bot, which can take first conversation, cloud customer engagement company in the Southeast Asia, Middle East, Africa region. The last part, which is not visible on the slide, sorry, it's right at the bottom, is the customer data platform, which is what we are researching and developing right now. So once we have so much conversational data, how can I build insights into your customers so that you can use them in day-to-day engagement? So that's one piece that we are solving. Just $100 million last year, and we are now basically going to mid to large enterprises to take or public cloud with all this stack integrated. Region, we have worked with banks, insurance companies, and wealth management companies in the region, in the GCC region, as well as India and Africa. Yeah, that I wanted to start with why. There, personalized sketches for you. Okay, on time and questions, otherwise.
Thank you very much. Focusing on the, do you find it, is it kind of anticipation that this is going to be the future of engaging with the clients when we use such, more are tech savvy, which is the new generations, and between the old, generations who might prefer to have a one-to-one, and which will happen in the future?
Brilliant question, and I will answer from personal experience rather than being a technologist. As I said, my dad is from the previous generation, though I am also getting old now, but my dad is from the previous generation. I have seen him adopting chat seamlessly, right in front of my eyes, without any triggers. Right? So there would be more face-to-face engagement or one-is-to-one. They need that comfort, they need that feeler. But in most 70%, 80% of the cases, they just want the job to be done. And actual experiences that on a medium like chat, on a medium like WhatsApp, it is actually faster. Thanks to all these family groups that are there in WhatsApp, you have the previous generation also part of these groups, right? All of us are part of our family group, friends group, college groups, right? So relationship manager should now be able to talk to my dad on WhatsApp. If you're not doing it, we are old school. But this cannot be their personal WhatsApp, because then we as a bank don't know what is happening. So that's the trend that I'm seeing, but it's inevitable. I think the same question 5 years down the line, would we require face-to-face? Yes. But it will be in extremely emotionally charged. No AI can solve that. As soon as the customer figures out that there is an AI, they don't want to rant. They're pissed. But they want to talk to digital channels, and people in this room are going to...
Integrating WhatsApp within the customers and data. Wouldn't that be a breach of data? With all the hacks happening within WhatsApp and all, and how rich in data. And other than that, what KYC measures we can take when it comes to integrating banking into WhatsApp? That I feel that, okay, yeah, I understand that, yes, WhatsApp is most commonly used application and all, and it's very useful. The idea is brilliant. But I believe that, and as they have spoken before, compliance will raise the biggest red flag on that, because it will cause a data breach. So how can we solve that?
So unfortunately, the compliance is the big street. Right? All of us do that. How effective is it? How many of you read an SMS as soon as it comes, or want the customer to know it? Sending that SMS on WhatsApp is completely okay. It's very similar. But if, let's say, your discussion gets into collecting documents, you can't do that today, right? So you'll have to pick processes which are on the fringes and the peripheral first and wait for the regulator to catch up. So that's one. I don't think KYC can be done on WhatsApp today, because that's not even an accepted medium. Accepted medium has to be a signed document, a digitally signed document, or a document collected. All that can still happen over website chat, which is completely within the bank's control, right? So we have seen KYC, any payment-related information in closed environments, and where you are basically starting an engagement, starting with WhatsApp. One last use case on WhatsApp, which all of you can actually do today. All of us are worried about total calls coming into the IVR and agent cost, right? I'm saying just put that process that if the wait time is above X minutes, try and deflect that conversation to WhatsApp. And how do I get my checkbook? I'm not even using anything personally verifiable here, right? Those 10-15% of the queries, your cost will go down in few weeks, right? So you can actually start with those. But we are trying to make it happen, ma'am. We have to convince the regulator that it's okay. By the way, WhatsApp is still end-to-end encrypted. So even if it's not device to device, we are a WhatsApp business partner. So it's then straight away from agent application to the customer's device. So it's still end-to-end encrypted. Yeah, okay, thanks.
Thank you, very much.
Thank you, David.
This is a certificate of appreciation here.
Thank you.
Yeah, thank you. minute networking break, but we're a little bit behind. So let's all meet back here at, what is that, 11:45. Please feel free to network. There's refreshments outside. Talk with our vendors. Talk with other fellow conference participants. Thank you.
Chair. Welcome back, ladies and gentlemen. Welcome to the Future Banks Summit, Mena 2022. Up next, we have another keynote by none other than Mr. David Bolokin. He is the head of deposits, payments, cash management, and banking as a service at Lending Club in United States of America. Mr. Bolokin, a warm welcome. Can we have a round of applause for Mr. Bolokin?
Thank you, thank you. Today I'll be talking about banking as a service. I'll have some time for questions at the end, and if we run out of time, please feel free to catch up with me at one of the breaks. I'm very excited about banking as a service. There's some pundits who say about $1 trillion is going to be invested in this. $1 trillion US is going to be invested in this already or in the near future. To put this into dollars US, and they just started a few years ago, they're serving the small business segment. That gives you an idea of the potential. You heard some conversations about WeChat, TechFin, Fintechs, small companies, medium-sized companies getting into this business. And I think there's kind of a couple different definitions that might be used. But to put this in perspective, I've kind of laid out what's open banking and what's banking as a service. Banking as a service is what we're going to be focusing on today. Open banking has been around somewhat longer. It's using APIs to move data around to access applications in banks and elsewhere. And an example of this would be a budgeting tool that's being created. That budgeting tool is basically bringing in information from many different sources. Could be multiple banks and the bank accounts in those banks, as well as perhaps investment services, credit cards, debit cards, and so on, and stitching that all together to give a client an experience they cannot get from their bank today. An experience in terms of seeing all their activity and creating a budgeting tool with that. Other applications are simply to facilitate money movement from buyers to sellers, money movement from either in the digital space. That's kind of a classic example of an API. Banking as a service is really non-banks integrating into licensed banks to deliver banking services. They're able to do this, as we heard earlier from the Cio Panel, faster and more efficiently than a bank. They also, of course, can stitch together that data from multiple sources. And they can create an experience that we saw earlier, for example, a home buying experience, a budgeting experience, an experience to help you pick and use what is the most favorable credit card to you in your wallet. So those are examples of banking as a service. The banks are supplying the platforms and the products, and then these fintechs are creating services targeted to specific segments, services that really stitch the whole thing together and deliver a better end-to-end experience for a particular experience they're going through or a particular industry that they are in. So how is this structured? I put together a very simple map here. At the foundation of this are the banks. They are licensed and regulated banks. They're providing the platform, transaction services, access to their core, potentially also some institutional expertise to work with fintech partners. They're essential in this equation. Then you have the middleware provided by vendors. That middleware can include the mobile interface. It can include the core itself. It can include interfaces between you and the core. That's the middleware. And then at the top of this, we have the fintechs. I'm calling them startups because some of them are already started up and maturing very quickly. They think of themselves, and they probably do, own the customer, but your brand, your bank brand, your name can be somewhere in their product. So from on the back of the debit card, it might say the bank's name and disclosures and so on. In the US, there's been some pushback because some of these fintechs are, at least in their marketing, calling themselves a bank. The regulators are pushing back on that. They are not banks. They're telling them that, although they are delivering services. Chime is like that. As these fintechs have gotten more mature in the US, they're going out and acquiring small banks. So they are basically disintermediating or seeking to disintermediate the bank. Of course, the US market, very different from your markets. The US market is thousands of banks, many small ones, so that's a possibility. But it could, of course, evolve to that in your markets too. One of the questions was asked, can BaaS, can banking as a service, enable cost savings in the customer acquisition? And it's always a qualified yes, right? It can, if done right and carefully. So I've just laid out 4 models, and you could argue the first one is not even banking as a service. It's simply referral marketing. But we see some fintechs offering this up. Referral marketing where you pay per account or you pay per application. That can be less expensive than your other marketing sources, so that can be attractive to you. You, in this case, own the customer. You, in this case, own the transactions and all the future aspects of that relationship. And you're still getting applications and customers from the fintech, but it's a co-branded product, and so you may jointly own the customer. There's potentially a revenue share or some other mechanism for compensating. That revenue share, for example, could be a stream of revenue over the life of the customer. And an example of this is a product for underbanked. That fintech may have relationships in that market. They may have relationships with employers that give them access to those customers and have some sort of favorable standing with those customers that your bank doesn't, so they then going to be servicing them. Then we get into 2 different banking as a service models. There's the Encore model and the FBO model. The Encore model is when those customers sit on your core, hence the name. It could be a co-brand, generate fee income from those transactions being processed. You generate, obviously, net interest margin from the deposits you hold, and there's going to be some sort of revenue share negotiation with the fintech. They may charge the customer directly, or they may, for example, want a portion of the interchange generated from the debit card activity, or they may want a portion of the deposit income. So you may negotiate, for example, 50 basis points on those deposits that are brought in through the program, and you remit that money back to the fintech. The 4th example gets a little more, is probably the most complicated one. These accounts are not on your core per se. They're perhaps on another core. In this case, it's kind of like an omnibus account. So they're not individual accounts for each customer. There's a single account, there's a group of accounts, which ultimately the end customers are sitting in, and you don't have those on your platform. What happens in that case, though, is the fintech can give you those deposits, essentially. So those deposits could be yours 100%, or they could split it across multiple banks. So in all 4 cases, you're getting customers, in the sense of they generate revenue, they generate deposits, which the lending arm can lend out. But your kind of ownership of the customer is very different, and your risks or concerns are very different in each of these. When you get to the 2 on the bottom, the BaaS ones, you have concerns about, will these be considered broker deposits? It's something, by the way, all of this is evolving very quickly in the marketplace. So deposits that were not considered broker deposits could be considered now. If anybody has a question what a broker deposit is, you can just ask me at the end. There's questions about the account quality and retention. These programs, it's going to be the total cost of delivering the program. So you will have your own operating costs. You will maybe have some overhead costs. You will have to pay vendors perhaps per transaction. And so as you figure out these costs, you need to include them back into your equation. Is this something worthwhile for you to do? There's contracts and there's business risks. Interesting thing, one of the US participants says they've received 900 applications or business ideas from fintechs seeking to partner with that bank, and they choose just 2% of those participants to work with, to partner with. So that kind of gives you the idea of the funnel and the importance to both selecting the right partner, having the right contract, and managing those business risks for success. It's not just a simple marketing acquisition, it's really the whole business that comes together. I put a slide in here around business risks. This is perhaps the most important thing to think about when entering these strategy. If they're serving a specific segment, does that align with your strategy? Does the whole program kind of align with your strategy? There's the profitability of the program. I think a lot of people mistakenly think they just have to go into this for the bank. And so therefore having that funnel I described earlier, 900 going down to 2%, having the right contracts in place. First party and third party fraud, those can be very large costs. Fraudsters are figuring out now that with all these additional new participants in who may not be as experienced as a bank and what they have in terms of both first party and third party fraud. So having those controls in place, both at the bank and the fintech, are very, very important. Reputational risks. Fintechs can be seen as an extension of the bank sometimes to exit it out, to protect the customers who are kind of left with loose account. Fintechs are serving the cannabis industry, and banks are, some banks are saying they're not going to touch those for obvious reasons. In place to prevent operational losses. Complexity. When you have, say, 20 fintech partners, that's a lot of complexity. Each one of those you have to manage from a AML, BSA, InfoSec standard to make sure they have the right controls in place, they have the right dispute management controls in place. Remember, they own the customer. They are responsible for is on the back of that debit card, or your name is in the disclosures. Your name is maybe in a small space on their homepage. So making sure that you are managing that complexity safely and soundly is very important. And lastly, regulatory. We heard a little bit of that earlier. There are not per se big changes in terms of risk, deliver good or guarantee good customer service to the end customers, but what they are finding out is that it's no longer managing that following the banking rules. If the fintechs are delivering banking products through your bank, they also are going to need to follow those same regulatory rules, as well as the fintech, but you as the bank to make sure that happens. So all of that is evolving in terms of the responsibilities and the actions that need to happen very quickly, but ultimately the regulatory laws in terms of AML, BSA, KYC, dispute resolution, those are, I think, remaining the same. So I kind of talked a little bit ahead in terms of what's on this next page here, the AML, BSA controls, infosecurity controls, operation and regulated processes, for example, the hold periods on a deposit when you clear funds, complaints processing or disputes resolution, disclosures like we have truth in savings, truth in lending, marketing materials. All of that is under, under closer review by the regulators because these are extensions of your bank effectively. They are fintech partners. They're not isolated banks. They're not your competitors, for example. They're working with you, and the regulators are looking at you to manage this. So, who will win? Perhaps some of the audience would like to answer this question, and then I'll give you my thoughts. So I'll take a response from the audience. Who do you think will be a winner in this marketplace? Anybody? Customer. Good one, not on this list. I think you're absolutely right on that one. The customer will be the winner because the customer is being offered products and services that are not being offered today. It could be a more seamless experience for what they're trying to do. It could be a lower cost product. It could be a product that has higher functionality. And again, the fintechs are able to target very specific small segments, or large segments for that matter, the underserved in banking, professional businesses, specific end-to-end experiences across products, investments for small-time investors, okay? So customers are definitely going to be the winner. Fintechs, somebody will be a winner in this space. I gave you an example of somebody who just started a couple of years ago, Brex, and they're now valued at $13 billion. I'm sure there's other examples like Robinhood out there. Very successful companies, at least in terms of what the market thinks. They may not have turned a profit yet, or just a small profit. But ultimately, some fintechs will be huge winners. And as that funnel I mentioned earlier, the 900 going down to 20, a lot of those small ones will be unsuccessful. They'll try, they'll have some very smart people working on them, but ultimately they won't be able to gain the scale to be truly successful, and then they'll drop out. And that's why there's that risk I mentioned earlier. If you partner with some of these, some of those will not succeed, and so you will have to be responsible potentially for the cleanup that occurs when a small bank fails. Banks who do not participate, banks who do participate. Well, one thing that's happening in the US is a massive amount of consolidation, obviously very different market than here, but the number of banks is shrinking quickly. Mostly smaller banks are merging with other small banks or just going out of business. Larger banks are merging. So this is driving merger activity. There's only, though, a small number of banks overall in the US that are participating in this. And they've decided, in many cases, to make that their specialty or a certain area that they're going to compete in. It's kind of been traditional in banking, right? In banking, banks, smaller banks at least, have picked certain sectors to focus on, certain industry sectors or certain types of products to focus on, and have been very successful at that. Larger banks, of course, try to target almost all segments. So I think the banks who do participate and do participate carefully, thinking about the risks I mentioned, thinking about that funnel in terms of selecting the right partners, they will be successful. In my own case, BBVA USA, where I previously worked, had something like 80 fintech partners. PNC acquired BBVA USA, and they decided to exit the business of banking as a service. It did not align with their corporate strategy, and other banks may decide that as well as this evolves. Now, in your markets, there tend to be a few large national players. It's very different. And so each of those may decide they need to participate in some way. So think about, though, the risks that I mentioned and how to structure that business when you do participate. It's so important. So ultimately, customers, a few fintechs, 1% maybe, 2%, don't know. The better managed ones, the ones with better business plans and better execution. And those banks that do participate in the right way. So we now have time for Q&A. I'd love to get some questions from the audience. Yes.
Hi, my name is Jerry. I'm representing from ADCB. When we talk about banking as a service and the other side is the customer, so where is the ownership? So the customer is dealing with the fintech. The bank is on the bank end. So where is the ownership for the customer? So whom does the customer go if they have problems or any issues?
Good question. Who does the customer go to if they have problems and issues? It depends a little bit on the model, but let's go to the banking as a service model, right, where the customer is being opened up essentially on the fintech site, right? They see the fintech. The fintech is their experience. The fintech is their CX and UX. The first place that the customer will go to should be that fintech. However, you are processing the transactions. You are processing the wires, the ACHs, the debit card activity. What happens if a wire goes wrong? Well, they might first go to the fintech because that's the number they're supposed to be calling. But ultimately, that problem will come back to the bank for resolution. If that wire was processed incorrectly, it could be on the fintech side or it could be on your side. So you are at some point involved in error resolution. The first stop, though, will be the fintech. And hopefully most problems will end there. But if things are poorly managed by the fintech, more of the problems will come your way. Hence, the contract. You can have SLAs in the contract, both for the fintech and from yourselves. If those SLAs are not being met by the fintech, they will owe you some money for that, and therefore create the right incentive for them to have the best customer management processes. Those customer management processes, for example, if there's a dispute, you want to make sure that they're being managed within the regulatory rules of dispute management. So hopefully that answers your question. It's a shared responsibility with the first line of defense being the fintech.
Thanks.
Hi, this is Akshay. Yeah. Yeah. Mm-hmm. Yeah, this is Akshay from here.
Okay.
Yeah, just a very simple question. Can you give some good examples where banking as a service has really excelled and for both the partners, bank and the fintech?
Let's see. Well, there are a couple I can think of. There's examples. There's a company called One, O-N-E, and they're partnering with a bank to offer banking services to Walmart employees. I'm not sure if you know Walmart, but it's probably the biggest employer in the US. They run retail operations. They also do sales to the internet. So because of that relationship, the employee-employer relationship with Walmart, there's essentially additional information that one can use about that customer that is different from a non-Walmart employee. And therefore, they can offer better services. So I think there's an example of kind of a win-win. It's a small bank that's offering this. So a small local bank that has decided to focus on fintechs and BaaS as part of their strategy. And because of this now, they have a national reach. And it's a product that they're not delivering and the fintech's delivering, but they benefit from that product, right? They benefit from those deposits or those fee incomes. So there's an example of one. There's others out there. BBVA's done Uber drivers in Mexico. That's another example. Brex, which I mentioned earlier, is small businesses. So these, I believe, are successful both for bank and for fintech. Mm-hmm. All right. Any other question? Last question, maybe? No? All right. If there are any other questions, be happy to answer them during the break. Okay. Thank you.
Can we have a huge round of applause for Mr. David Bologan, please?
Thank you. Thank you.
I would now like to call on to Mr. Rohan Sharma to please felicitate Mr. David Bologan. Mr. Sharma.
Oh, thank you.
Can we have a huge round of applause, please?
All right, thank you very much. Thank you. All right. I have a dual role here, as you see, both presenter and chair, and sometimes also moderating. Next up, we have our CIO panel. It's Creating the Future in an Age of Disruption, Transformation of Financial Services by our CIOs. This actually is going to be a hybrid presentation. It's reflective of the times we're in, right? So our moderator, Nimo Ganawardena, is going to be participating via Zoom, I think. And one of our other participants will also be participating via Zoom. Let's see, Nimel, I'm going to let you introduce the panelists and join us in a second, I guess, via the web. Nimel is the Director of Internal Audit in the Central Bank of Sri Lanka. He'll be introducing you to the panelists. He's experienced in internal and external auditing, reserve management, foreign exchange trading, human resource management, and tax administration. Please give a warm welcome to our panelists, our moderator, some of which will be here in person, and some of which will be joining virtually. Please, come on up.
Yeah, thank you very much. Good afternoon, everybody. And I welcome all of the panel discussion. The topic is creating a disruption, transformation of the financial service here. Actually, we are living in a world of innovation, disruption happening and accident. Mobile phone are taking over most of the sector, performed by laptop, desktop, camera, and the digital device. World big business run on digital platform. World largest travel company, that is Uber. Most popular marketplace in the world, that is Alibaba. And world largest accommodation company, Airbnb, and investing is one of the most popular media there. It is all around digital platform. Artificial intelligence is used in financial services. So therefore, the topic is time. Now I have the present task of introducing our eminent panel member, Mr. Shahid Chuma, CIA, Pakistan, will be joining us virtually. Mr. Part Al-Fahid, Head of Retail Banking Platform, SADE, Kingdom, Saudi Arabia. Joining live. And Mr. Louis Otier, Head of IT, and he's also from financial services industry and will be joining us. So I would like to invite our audience to welcome our great panel with warm round of applause. Now, thank you very much. We can go on to the discussion. The first discussion point, drivers and indicators of IT uptake and digital transformation financial services. So then I invite Mr. Pan to make his comment. Mr. Pan, over to you.
Yeah. Thank you, Nimal, and thank you everyone for your time here. Yes, my name is Farid Twajri. I'm in software and technology of retail banking for more than 10 years now. The question is about disruption, right? About in technology, which is really, and usually we deal with, I mean, the dynamics of the market usually deals with two things maybe. I mean, customers' expectation, they change by time, and the regulator. But we have a third component now, which is the competition. I mean, we have those greenfield fintechs, new digital banks, adding complexity to the equation, causing disruption in the market and raising high the competition, especially with big banks with legacy systems and all of that internal complexity. So yes, we are living with, I believe, one of the biggest disruptions in our day-to-day activities, whether it is the technology we need to introduce and compete with, and keeping up with the legacy we live in. Anyone? Luis, do you want to add anything?
Yeah. Mr. Shahid?
Yes.
You can comment in the end.
This is about the discussion, right? We are talking about this. Actually, from the CIO perspective, what I can add into it, that the role of the CIO in today's digital world, if we just look at this thing in a holistic manner, what we are witnessing altogether, that the world is now changing, in a drastic way, where the business models are actually transforming, right? As you just mentioned, Mr. Nirmal, that we are ordering the foods online now, we are actually having the online shopping, and everything is taking point digital. So the CIO role has also changed a lot. And we really, as a CIO, cannot run as a traditional CIO. There was, if you can just remember, there was actually a gradual shift in the role of the CIO when it used to be head of IT in the early 2000 years, right? Where the primary responsibility was managing the IT infrastructure and data center, that's it. But then in the late 2000s, the CIO role was emerged, running the technology shop, which is from business acumen. Now I would run the digital, the CIO digital, the technologies into the business proposition. So the platform integration, the digital orchestration, the data monetization. So these are actually the core DNA which is being introduced in almost every company to be defense. So the disruption is inevitable, but only those companies understanding the need of the digital and the need of Gen Y and Gen Z would be actually more successful going forward. So actually I just was going through one of the articles of the International Consultancy Firm that around 50% of the companies right now operating in a sizable manner will be vanished in the next 10 years down the road. Primarily because of the reason that they may not actually cope up with the new business model. So the disruption is inevitable and the changing need, and the companies and the role of the CIO needs to be changed accordingly. So the CIO role is becoming more and more important and more vital.
Yeah, thank you very much. Mr. Louis, so maybe...
Yes, I think, like my colleagues have said, the role is definitely changing, especially in the current situation that we find ourselves. I think it's one that's changed quite quickly as well, where CIOs have traditionally been technologists, people that have come up through the organization to run the technology of the organization, that people that are very technical and really know what's going on within the organization. Whereas now with the pandemic and moving towards a digital organization, the role of a CIO very much is more to be ahead of the organization and to join the organization together. We're living in a connected world, yet I think we are very disconnected, even though we have so many technologies at our disposal, especially in the organization where business and IT so often move away from one another. Again, in today's environment where we may not necessarily sit together in the same building, same country, people are working from home, you really need somebody with the appropriate vision and strategy to really encapsulate the entire organization and drive not only the IT component but also the business side towards a complete and utter digital organization that ultimately serves the customer.
Very much. Again, Mr. Bhatt, so we would like to see your thought on the banking innovation accelerator in days among banks. Mr. Bhatt?
Knowledge accelerator? Yeah. Yes, I mean, especially in the retail space of technology, I mean, it is a demanding portfolio. I mean, a typical bank with the retail banking portfolio consists of hundreds of projects a year, all in different applications and different technologies. Any CIO will have to make a decision. Shall I do it myself? Shall I buy it off the shelf? Shall I partner with someone? And if I do it myself, then I have to support it. I have to have that knowledge transferred to my team to keep up the systems and the changes in the future. And it is really, it is critical decision to be made on day-to-day basis for every single project. Adding to that complexity, we have technologies that emerge and die in few years, not like before. I came from a bank where the core banking is 30-something years old, but now our competitors is coming with the state-of-the-art technologies, coming off green, cloud-based, easy and flexible and all. So certainly that adds complexity in competing with them. Whether you need, in the end, you have a sitting board showing, I mean, to present a business case as a technology change is not that easy. You ask the management for big amount of money with no tangible, quick benefits, I would say. It is very hard ROI to make. I see a couple of gentlemen are nodding here. I mean, you present a business case to any managing director asking for millions to change system X, Y, Z, making microservices or whatever. I mean, it is not an easy ROI. So, yeah, definitely, in the end, we are not a technology firms, and that's what bankers say, but by nature, we are moving to. You see the number of technologists in any bank, how it is increasing. We are becoming more and more technology companies, providers, and we see that definitely in the market.
Yeah, I think in terms of knowledge acceleration, it's quite difficult, especially for traditional and historical banks. Fintechs, not so much. They're smaller, they're more agile, they can operate a lot quicker and easily. Where traditional organizations with vast numbers of workforce and processes and policies that are already in place, oftentimes you find that it's quite difficult for the organization to change track. However, for the sustainability of the organization, it is needed that we diversify our workforce and make our workforce more adaptable to what is happening, also make them being able to transfer knowledge to partners a lot quicker than what is the case at the moment. There's a general fear at the moment due to the rapid change in technology. I think a 2020 KPMG survey found that about 81% of the people they surveyed were reluctant and fearful of technology because of the rate of change. And I think the only way that large organizations, such as historical financial institutions, can overcome this is really by empowering the employees and allow them to diversify their own skill set beyond the siloized roles and responsibilities that have been assigned to them.
Okay, right. So thank you very much. Great. So with that, you move on to acceleration to digital transformation. Probably this is something. I invite Mr. Louis to make us aware.
So I think in terms of automation, we need to ask why. Why are we automating? A lot of companies are talking about this, and I think as a concept we need to realize that automation is, I think, about 20, 22 years old. However, the implementation thereof is still very new. It's only in the last 6, 7 years that we've really seen organizations implementing this. And again, the question is, why do this? Ultimately, the answer should be to the benefit of the customer. However, you do see a trend at the moment where companies very selfishly do automation for themselves to improve processes, to reduce cost, and really just to make everything a bit faster. Ultimately, the customer do in some way win, but as an organization, I think banks, in particular traditional banks, would need to go and sit and get an end-to-end view on the automation and how that can really help in delivering a good service and a better service to the customer. There are obviously numerous benefits to automation. Like I said, cost cutting and reducing processes and all those sort of things. But I think despite all the benefits that there are considerable challenges that we still face today. Some of the major ones remain to be your reluctance from your workforce. There's a general view that with automation comes a loss of employment. A lot of people will be without their jobs. And I think the organization would need to build a proper strategy to manage the automation process to ensure that the workforce that are being displaced are moved to new areas within the organization. I mean, if you take RPA, for instance, it doesn't really do away with the employees. There's still people that need to run those processes. Another problem we have is legislation. Because it is so new, legislation hasn't really caught up with the technology. And at the moment, there's a big gap as to what can be done in terms of automation and what can't. If we take, for instance, GDPR Article 22 says that a data subject can or does have the right to withdraw permission for any automated decisions to be made, whether it's for mortgage loans or whatever the case may be. But there's no specific criteria as yet as to exactly what constitutes the withdrawal of rights. So legislation definitely needs to be looked at. I think the third biggest challenge really is legacy. And I've touched on this previously as well. In terms of the large traditional organizations, legacy systems is still something that really bogs us down. We've got our core banking platforms running for 20, 30 years, that's been built on over and over again. Really finding processes that can integrate across the platform is a struggle, and I think that's one of the biggest challenges that large organizations tend to face.
Okay, thank you very much. So we'll move on to the next topic for the discussion. That is the major change in the role of CIO in the future to tackle advanced digital transformation. Mr. Said.
Actually, as I just mentioned earlier, that when it comes to the digital transformation, the core business models are changing all over the globe. So that's the role of the CIO as well. And it is generally perceived that the CIO, being the technologists, understand the digital transformation by default. But I would say that this is not a fact. And even the CIOs, the seasoned CIOs have to go through the challenges of the generation gap. Because that the seasoned CIO may not be able to understand the computing need of Gen Z and Gen Y. How do they operate the computer? They are not operating the computer in a traditional way if you just look at the retail sector. So I would say that the role of the CIO is changing, but psychologically the CIOs also need to understand the new technologies and its use cases in terms of the value of the data has now changed in the digital world. Though the data value was also important probably 10 years back, but now the contextual data, the geolocation is very important while developing the new mobile application. It's contextual data, it's big data analytics, it's connectivity with the social feedback. So that the way we were looking at the data has entirely changed, and the way the user experience has changed a lot. And the CIO's responsibility, the role has changed in the way that the CIOs need to understand all those new digital technology in a different way. In addition to that, if we even look at the traditional thinking of the CIO as of now, so moving your application stack to the cloud, there is still a fear, moving as the head of the CIO all over the cloud, because the CIOs or the system CIOs have been operating their applications and data center on their own premise. So it's actually a paradigm shift when we are talking about actually, just outsourcing those things to the cloud. So the traditional CIO would think that what would I do if it just goes to the, other location. So their priorities have to be changed now. They are not the traditional technologists anymore. They need to understand new technologies and its, use cases in the core DNA of the business model of the company. So it has been really changed.
Yes, okay, thank you very much. Stefan, if you have anything you can add.
Yeah, as a role of CIO, I mean, previously technology was seen as a service provider in the bank where they get requests to automate this or expose that digital service and they do it. But not anymore. Now we have whole business proposition led by technology and like open banking, for example, or BEN sponsorship, or those are just examples of business propositions that wouldn't exist without that technology advancement. CIO, yeah, I believe sooner or later, the top tier of the managements in all banks will be technology backgrounds. CEO, where the bank I am in, is the first CIO that reports directly to the CEO. This gives a message how technology arm is leading a business proposition in the whole bank. And yes, so technology is not anymore seen as a service to the business. Rather, it hand in hand with business leads good, business proposition and good customer experience.
Yeah, just briefly, I think traditional banking is dead, very much in the sense that we no longer provide banking to customers. We are now technology companies that provide services to customers. And your customer can be the man on the street as well as the guy sitting in business. And I think that very much talks to the changing role and how the CIO and the IT organization is impacting the organization, where previously IT tended to be just a supporting function, trying to deliver what is being asked, where given what is happening currently in the environment and in the business environment, that has changed around, where IT is very much driving the business. And I think we need to be very sure there that we are fully digital and that we not only digitize the current process that we do have, but that we really focus on delivering and developing a digital organization to the benefit of the customer.
Right, so thank you very much. Okay, the next point that we need to discuss. In today's technology-driven world, strategy and idea is extremely big. How to structure the role of CIO, that's what we need to know. Maybe I invite Mr. Fahid Riaz.
The role, I think, frankly speaking, all over the globe, the CIO is already involved in the whole strategy of many companies, including the bank. I myself is practicing that I am actually very much involved when the bank's, the private strategies develop. And this is moved around the technology enablement as well. And as Mr. Park wrote, that CIO is in many of the banks is directly reporting to the CEO. So I feel that the world has already actually realized the importance of the CIO. And the CIO is already playing a very important role, even as a traditional CIO. But when it comes to digital, yes, it is actually adding responsibility and adding the role as well. But it is very, very much scary when it comes to this strategy and the role of the CIOs around this particular way.
Right. Thank you very much. Mr. Louis, Mr. Park, if you have anything to add, Mr. Louis, any quick thought?
So again, I think given where we are, the change in organizations, the underpinning rule of the CIO is very much being able to deliver to the organization, where it's becoming a role you need to lead the organization as opposed to follow the organization. And that brings about a lot of difficulties, definitely, because it's in many ways a lot easier to be a follower rather than a leader. So somebody in that role would need to be very strong, somebody that can understand the business and know how to drive it and where to drive it. And of course, that's all underpinned by the overall strategy of the organization.
Yeah. I believe back in the days when we used to have a risk department, and then they started to, giving awareness to all departments and all the bank that everyone should be risk aware and everyone is the line of defense. I believe technology will be the same. It is not a technology department only, but every single member in the organization should have the basic backgrounds, should have the mindset to drive the whole technology transformation in the bank. It should be embedded in the culture, it should be in the mindset, in the day-to-day activities, how you see the digital transformation of your organization this is where it starts with. And the CIO should lead all of that. Thanks.
Yeah, I invite Mr. Louis to discuss the point that is okay now on this point. Organizing banking of challenges. Mr. Louis,
Yeah, so I want to touch on business continuity. So I think we've surprised ourselves very much in the last 2 years or so in terms of how quickly we've adopted to changing environments. I remember December 2019, I was in a meeting with our business counterparts discussing working from home and hybrid working, and keep in mind this is before COVID struck. 3 months later, everyone was working from home. Now, when I initially raised the point, everyone's dead set against it, because how can we as an organization actually work outside of the office, away from the traditional brick and mortar? And yet, like I say, 3 months later, we were doing it, and we actually found that in many ways it was more productive. Yes, it brings about its own difficulties and challenges as well. But productivity went up, happiness in many respects went up, and overall it was good for the organization. I think, in the banking, in terms of business continuity, we have been focusing up to now very much on just keeping the lights on, making sure the existing organization runs, and that we are able to serve our customers. Where going forward, we need to change and move up on the digital maturity level. At the moment, we're very much focusing on simply just doing digital, meaning that we are transforming the processes that we do have in place, automating them, making them available to everyone in the organization. However, very few organizations have taken the leap into becoming digital. So really changing your operating model, changing your business model, changing the way that you service your customers and your employees, making sure that they are fully digital and that you cater to their digital needs. We're seeing that the rate of change has accelerated over the last 2 years, where previously people still wanted to go to a traditional brick and mortar branch, want to see somebody in front of them to conduct their banking businesses. However, over the last 2 years, we've moved ahead quite rapidly, where people are now happy to do their business online. Recent studies have shown that about 80% of people, I think 79% of people, are now more willing to do business online, digitally. And I think it's important for all organizations to make sure that they really encapsulate the entire customer offering, make sure that the omnichannels that are provided to customers are fully ingrained within the organization, that there's a full and decent strategy from the organization side executing the digital transformation.
Okay, thank you very much. Mr. Khan, you can add the final comment.
Yeah, about business continuity, banking is a service that you want it up and running all the time. It could lead to, missing a service could lead to a fraud case or a customer to lose an opportunity. So it is not an easy business. Again, it is not about only technology, but internally there should be the business processes that ensure business continuity is up and running for the customers all the time. Financials is not an easy matter to deal with, and that's why, there is a focused team on that, set and procedures and all of that in place for that purpose.
Okay, thank you very much. Sorry, do you have any comment? That will be fine.
Well, let me comment that when it comes to banking automation these days, as mentioned that generally the banks are now focusing when it comes to banking automation customer journeys. So this is the first and foremost priority, where the customer should be able to actually perform most of the banking transactions through the most appropriate electronic mobile device, right? And all the allied journey, the back-end processes, and should also be automated to actually give the end-to-end customer journey without human. So this is the most appropriate proposition.
Okay, right. So thank you very much. Actually, very interesting and very important discussion. to invite our audience to raise any question. Point is ahead right now.
Audience, thank you very much, gentlemen. And for those of you who are in person, I have a certificate of appreciation. Let me hand these out one by one. Mr. Fahad, thank you so much for your participation. Thank you again. Mr. Lewis, thank you again, too, for your insightful participation. And thank you also for our two gentlemen who joined us virtually. Again, it's a sign of the times, a hybrid presentation. Thank you very much. All right. Okay, well, we have another fascinating presentation coming up. It is going to be from Mr. Stuart Lockhee. Mr. Stuart Lockhee is going to talk about the UAE Data Protection Law, Federal Law 45. He is the CEO of Middle East and North Africa for Hansel. He is an award-winning retail banking professional with a distinguished track record delivering on strategic and budgetary initiatives. He's designed and delivered several new digital banking initiatives in his prior roles. And one of those roles was a leadership and mentoring high teams and individuals across the industry, including the Chartered Institute of Bankers based in the UK. Please welcome Mr. Stuart Lockhee, who is, I think, just about to come up. All right. Thank you.
Good morning or good afternoon, ladies and gentlemen. I know I'm standing between you and your lunch, so you'll be pleased to know that what I propose is I will run through this session and then we'll take Q&A in the lobby. I think that's a good idea because I can see a few people wavering. The purpose of me coming here today wasn't necessarily to talk about the UAE new law and legislation. It's a very interesting panel coming after lunch talking about challenges in technology and retail banking. However, I just suggested to the organising group here that it's just worth me taking a few minutes to take you through some of the changes that's coming. And the reason why am I the qualified person to talk to you is in my role as CEO of Hansel, we've been through all of this in Europe with the General Data Protection Regulations, which is an absolute book. And Louis mentioned it earlier about clarifications coming. It is actually coming very, very soon. So let's just run through a few things. Which button is it now? Can you click on the next slide for me, please? Oh, there we go. Okay, so let's just go back. There we go. Okay, so on the 2nd of January 2022, the UAE passed legislation that every company has to be compliant in data protection by November of this year. It probably largely passed a little bit unnoticed, given the fact of the time of year, 2nd of January. There is a date of November this year where you have to be compliant. Now, the reason why this is a big date is because it will actually take you about 6 months to be fully compliant. And be under no illusion, this is not an IT project. This is a change of mindset. This is a change of how your companies will think and will act. The aim is to ensure that the customer's data is kept safe, is kept in a transparent way. So already we've seen in the UAE where direct marketing calls have been made illegal. The way you talk to customers, the way you manage customers' data now has a very strict set of guidelines. This will be looked after by the Emirates Data Office. They will be a new regulator. Every country that has data protection has a regulatory body. So this won't be the central bank, this will be a separate regulator. November is the original date for completion of this. Okay, so
back in 2018, the EU went through similar challenges. Now, the reason I'm talking about Europe to you guys in the Middle East is the UAE law is almost an exact replica of the GDPR legislation. So the more you understand GDPR, the more you'll get a flavor for what actually is going to come this way. This is the process in terms of how you do it. There's 11 chapters and 99 articles in terms of the detail involved in being compliant. So you can see it's not a small piece of work at all. We've talked today, and I've heard a lot of conversations about customer experience, customer journeys, customer NPS scores. This is where you will see the customers getting control back of their data. There are only 6 legal ways where you're able to store customer data, and they're listed out in the guidelines. Just so you know, an update to the UAE law will be coming in April of this year, and I'll talk a little bit about that in a minute. But data subjects, so people, you guys, are now in control. So how your data is managed, how it's kept, why it's kept, how it's transferred from company to company, has to be followed by a very strict set of defining guidelines. If you're a company that has overseas business, you have to have reciprocal and contractual arrangements with those people in place to ensure that the customer's data at all times is held securely. GDPR, and referring back to that, if a customer writes to you to ask for you to show how they store their data, you have 30 days in which to comply. Okay, so it's actually very, very serious, which is why I say it's not just an IT-related issue. I'll give you a small example now. In terms of marketing, when you see it on your websites, you have to proactively do an action to opt in. You can't actually just non-comply or non-ticking of a box is not a form of acceptance. There has to be a positive action from the customer in order to give their approval for you to use their data. Okay, so why are these laws needed? We've seen since the 70s and the 80s, people's data and people's privacy laws from the Treaty of Rome all the way through the Maastricht Treaty, it's becoming more and more of an issue. There's actually 2 movies, if you get the chance to look. I was looking at them when I was on the plane. There's a movie called The Social Dilemma and The Great Hack. And if you get the opportunity, watch those 2 movies, because those 2 movies can articulate much better than me data protection. This is all about how companies such as Facebook, etc., have used your data without your permission to gain an advantage, whether it be an election or however they want to do it. So those 2 movies are very well worth a watch. Now this is about ensuring that the customer has control of their data. Okay, so similarities. The map's probably not very clear, but what that map shows you is the privacy laws around the world. So you can see that this is growing. Saudi Arabia will be going live in March this year on their data protection. Egypt have their own legislation in data protection, which is not enforced by banks yet. The data protection that's coming into the UAE will have slight differences with the free zone and with the DIFC, which needs to be clarified. However, what you need to be aware of is that this is something that's just growing and growing and growing. So customers' data globally will be ensured that it's protected and regulated by its own country governmental body. In fact, in some countries like South Africa, they even have criminal charges against people for not storing their data. Okay, one of the things that really struck us when we did GDPR in the UK and Europe was nobody really did anything about it until the fines got announced. The fines are being announced for the UAE in April or May of this year. Okay? But to give you an example, if the GDPR is to be anything to go by, a maximum fine for GDPR failure to comply is 4% of the company's global turnover, or 20 million euros. Okay, so this is not a small fine. This is not something we can just kick the can down the road. This is coming. I mentioned about South Africa. And probably the best example I could pull out for you of companies that have fallen foul of data protection laws is British Airways, who were fined £183 million sterling because half a million customers' data got leaked. So these legislation and these laws have teeth. Okay? So what do you need to do? The clock is ticking. One of the things that we've suggested, and I suggest you do as quickly as you can, is you perform a data protection impact assessment of your own company. Because no matter how much you think you're covered in this area or you think it's somebody else's responsibility, I can assure you there'll be areas that you need to focus on. All parts of the business are affected by this. This is what we've seen, not just IT. It's not an IT project. It's not a compliance product. It's not a project. It's not a retail project. It's a company-wide. You will need changes from 6 to 18 months to implement. Okay, so it's a huge, huge project. Work streams are required from board member level down to support this. There'll be a new role, data protection officer. A data protection officer doesn't really have to work for your company. In fact, a data protection officer can actually work for separate companies. But if they do work for your company, and if you are a bank, they have to be an independent body. So they don't actually report to anyone other than the board. Okay, there's no direct reporting line to give the seniority of the role that it requires. So one of the things you need to be thinking about is if you've got internal candidates that you want to train up to become data protection officers, then you need to make sure that they've got enough bandwidth within their role to perform it. We've seen, we did some work with Santander in Europe, and they have 4 data protection officers. Okay, so depending on the size of your business, you may only want to share one with another company, or you may need more than one on yourself. Training is an absolute must. Whether it's a 3-hour awareness session or it's a 3-day practitioner workshop, but training for all your staff is an absolute must. So seek out the training as soon as you can, because the more everybody understands, the more it will actually be an easier project to manage. And unfortunately, it's the curse of every bank today. This will require a budget. Technology requires a budget. Unfortunately, data protection requires a budget as well. So if you haven't planned for this, and the reason I wanted to talk about it today is I've just seen that it's just slid under the radar of so many people's minds. And you're doing your budget process October, November, December, without realizing it, all of a sudden we're into March, April. They're going to hit you guys with the fines in April. Then the bridge is burning. There's a burning platform. Okay? So make sure that if it's not your area of responsibility, when you get back to your offices today, tomorrow, later in the week, you take the opportunity to look into this. I'll even try and share some of these 99 chapters with you. So I hope that's been useful, and I'll see you outside for lunch. Okay? Thank you very much. You don't have to stay for this. You can go get your sandwich if you like. Great. Thank you so much. Very kind of you.
Ladies and gentlemen, now we'll be leaving for our lunch for next 1 hour. See you soon.
right, we'll get started again. Welcome
Madrid
back,
end.
ladies and gentlemen. We're continuing day one of the Future Bank Summit for 2022, and we'll now move to our most awaited panel discussion for the day. It's solving the biggest technology pain points in retail banking. Stuart Lockhee, who I previously introduced, will come up, is going to be leading the panel. And as a reminder, he is CEO of the Middle East and North Africa at Hansel International. Stuart, thank you. If you would kindly introduce the panelists. I understand one of them will be joining us virtually, and the rest of us are, I believe, here in person. Thank you.
Good afternoon, everybody. Welcome back from lunch. Before I introduce the esteemed panel, I'll just set the scene a little bit for this afternoon's session. The retail banking landscape has changed in recent years. Not only do banks have to compete with each other, we can see growing competition from alternative service providers, challenger banks, and tech companies. Modernization of tech is required to meet growing customer expectations and demands. Banks are turning their attention to this area in order to try and gain a competitive advantage. How do we make legacy systems compatible with today's demands? We've learned since COVID arrived that online banking globally has risen 23%, and mobile banking is up 33%. Current operating costs are not sustainable, and banks need to highlight digital value streams in order to meet this growing challenge. Statistics show us, if you look into it, that there's a close correlation between customer satisfaction and an increased bottom line. So this afternoon, we're going to address some of these issues. I believe we have two of our esteemed panel that are joining us virtually. Before I introduce those, can I introduce Mr. Fahad Al-Tawadri, who's the Retail Banking Technology Head for SAB from the Royal Kingdom of Saudi Arabia. Please give him a round of applause, ladies and gentlemen. Whilst Fahad is coming up on stage, joining us virtually, we have Amit Malhotra, who's the Head of Personal Banking at Commercial Bank in Dubai. So he's going to pop up on here in a second. And we wish him well. He's hurt his knee, which is why he's joining us virtually. Amit, welcome. And we also are very delighted to welcome Ashmar Riaz, who's the Executive Director and Consumer Head and Private and Small Medium Corporate for Standard Chartered here in the UAE. So please give these gentlemen a round of applause as well. I'll move my chair so you can see them. How's that? That's a bit better. Gentlemen, I hope you can hear us and you're all okay on the screen there. Okay, so we've got a few... Excellent. Thumbs up from both of them? Good, good. Okay, so as I said, and I set the scene, what we're going to be looking at is what are the pain points when dealing with technology modernization? How do banks deal with higher customer expectations? And are there any proven strategies to manage cost and improve service? So I think as Fahad is sitting here, we'll start with you, sir, if we may. My question, I suppose, at the moment is, regional banks dealing with tech modernization, what are the pain points?
Hi, Stuart. Hi, everyone.
His mic's not on, by the way, guys.
Yeah. Like they say, retail is detail. I mean, I would say the difficulty with dealing with retail technology is that you deal with big volume of customers. I mean, unlike the corporate customers, corporate banking. Retail customers can reach you from, I don't know, 7, 8 channels. So you have people prefer online banking, mobile, there's SMS, email, telephony, ATM, card. Sooner or later, customers will be reaching you through API services from third parties. So keeping up all of that secure, convenient, and up to customer expectation is not an easy job, and it is a struggle that, we have to compete with every day.
Okay, I mean, Amit, I'll bring you in here. We had your boss here this morning, and he was telling us that he felt that his bank's retail transformation was pretty much there. Obviously, you're the retail head there. Can you tell us what challenges you faced in some of your tech modernization efforts?
I think before I do that, I must take the floor and ask you for some additional bonus now that we have the boss himself.
Sorry, you have to repeat that, Amit. I didn't quite understand that.
I said coming out of my boss, that means the first thing I need to do is go and ask him for some extra bonus.
Absolutely. He's very happy with you this morning.
Yes, we've come a bit in the last 3 years. identified that what are some of the strategic pillars that we got to build ourselves. So that is something where we build our technology or we enhance our existing platforms. And then we identified what are the areas where it's going to be smarter for us to partner, either partner with tech firms or partner with fintechs and offer these as solutions to the customers. And while doing that, obviously the most important thing was that what is something that causes the best impact for the customers. So what is the most sensible way to deliver to the customers? So keeping customer in the middle, we went back and we said, what are some of the things that we work on ourselves? So the systems that we enhance, the capabilities that we enhance on our systems. Obviously having legacy systems is never an easy task. And at the same time, we decided that what are some of the things that could be faster, smarter, and more effective to partner with tech firms or fintechs and offer these solutions to customers. So that's one thing that we work well, has worked well for us. Having said that, I think the constant challenge that we continue to face, and I think that is a reality for some time, is that while we do that, the whole environment that we're operating is changing very fast.
Yeah.
Right? So just when we thought that we were solving for a smart mobile banking capability, the world started talking about blockchain and the world started talking about open banking. Hence, you have to go back and say that how do you then gear up for these, keeping again that what is the sensible way to do for the customers. So I think one challenge is how do you cope up with the ever-changing environment? While you do that, how do you make sure that you still are compliant to the regulation and keeping in mind the regulatory requirements? And while you do that, obviously you have to keep in mind that the customer security, the data confidentiality, the overall data governance, as well as the security of the system that you operate on. So I think those are some of the moving pillars, as I said. And within that, I think what we have done is to see what is the best strategic approach to operate with these constraints and challenges around us.
Okay, Amit, thank you very much for that. Ashmar, is there anything you'd like to add with regards to what Fahid and Amit have said?
Thank you, Stuart. I hope I'm audible.
Yes, we can hear you well.
Thank you. So I think before I say anything, let me thank you guys for bringing us together. I think work management has done a good job. These topics are important and everyone should understand the landscape and how things are changing. So my colleagues Fahad and Amit, of course, they've touched the right area. Retail is detail, partnership is the key, and the goal is changing every single minute, second. So we need to be really agile in retail space to keep up the pace and really target our consumer well. I think if I may add two more things here, Stuart and the audience. I think first thing first, guys, we need to understand our customers. That's very important. And yes, customer expectations are changing with this fast-moving technology. And I think I can share a few things which Standard Chartered has done that has really helped to reach to the customers, meet their needs, and help them drive more and more reach. So first thing first, I think we, before even COVID started, I think what the bank has done is it has started to invest heavily in digital. I think after COVID, it's a no-brainer, right? Everybody is investing in digital. So what has helped us is we were ahead of the game. We have launched 9 digital banks in our 15 AME markets. And those digital banks have really helped to target the clients, be at their doorsteps. See, because we need to understand in our retail banking, what is the highest cost we have? That's our branches, right? Cost to serve in any branch is very, very difficult. And you need to cater to so many levers over there. So the best way to do it is to be there where your clients need, and that can only happen through technology. And like Amit has said, partnership is a key. There's no two ways of that. We've got fintechs coming up with unique solutions, whether it's blockchain, whether it's DFIs, whether it's cloud technologies. And what every bank has to do, and which Standard Chartered has done very well as we speak, is to be in partnership with fintechs. You don't need to compete with them. They have their own space, we have their own space. And I must add, don't just stay in fintech. Go to the telcos as well. We've got Etisalat Group, the world's in UAE. If I go outside UAE, there are Africa markets. I'm currently posted in one of the Africa markets to do some transformation. And I can tell you very openly that telcos play such an important role with whom you guys can partner, reach to the client base you need. Because like Fahad said, retail is detail, it's all about masses. So, and every client wants to increase their income. It's like we guys are sitting here. If we could get a solution whereby any priority client income can be doubled, we will run after that bank. So in summary, I think we need to be agile, come with new products, even small investment products, really cater to the masses. And through this unique innovation, we can really reach where our clients want to be. The second important thing I would like to add to it is analytical. We need to get really deep into analytics. Retail is big. You need to know which room you want to play. You need to know which target clients you want to target at. You need to really have your CVPs established. And when I say CVPs, these are your unique propositions you have for each of your clients. So I think once you package all this, then it can really help to reach our clients. If you are just doing one thing and just trying to figure out that this is going to take you to success, I think those things are far behind us. Thank you.
Okay, so I mean, from what I'm getting from the three of you is obviously that the tech is constantly struggling to keep up with customer demands. Amit, I'll come back to you just on this for a moment. We know the customer base is demanding and their expectations are growing. Have you got any key steps to ensure success? Anything you'd like to share with the room in terms of how does CBD keep up to date with growing customer expectations?
Absolutely, yes. And just to add to your point, I think it's becoming even more challenging and difficult because the way the customers engage with the banks itself has been changing. Gone are those days when banking was about a bank, a physical brick and mortar bank which used to operate in certain working hours. Today's banking is something that you do on your phone. Today's banking is something that you do with just your biometrics. Banking is something that you do just by looking at a screen. And more importantly, more and more the banking services are being embedded in the customer journeys. So what we have been doing in CBD is, we started what we call as DFC, which is direct from customers. So our approach has been that keeping in mind that customers need convenience, keeping in mind the way the customers engage with the banks have been changing, keeping in mind that customers want flexibility, they want transparency, they want ease of use. We have been redesigning our journeys, and that is what we call direct for customer. For example, today, a customer can open a new bank account, and I would suggest audience should try while sitting there, where all you need is your smartphone and your Emirates ID. Or for that matter, if you have a UAE pass, you don't even need that. And within 3 to 4 minutes, you actually land up getting your IBAN and a virtual debit card, and you're actually a transactional banking customer with us. You can actually start transacting. The same thing today is you would be liking a property with your family, you want to buy it. You could again, just with an Emirates ID in a phone, take a mortgage loan where you get your approval instantly for you to be able to lock in your mortgage and get the best deal for yourself.
Excellent.
We have similar journeys for credit cards. We have similar journeys for personal loans. And all these journeys, it is all about customer being able to do everything just with a smartphone in hand, 24/7 as per customer's convenience. That's one example.
Thank you.
And while to do that, what we've done is we've, as I said, partners with Fintechs in certain areas. So we've come out with products and services, partnering with them. We were actually the first bank, for example, to launch a robo-advisory app, which is called CBD Investor, wherein actually people can download the app and invest as low as $500 onwards. So we've got quite a few examples, but I think the key is that we've been leveraging data, we've been leveraging analytics, we've been leveraging partnerships with Fintechs, we've been leveraging institutional data, and then coming out with products and services which are completely centered around the customers.
Okay, thank you. I mean, Fad, can I bring you in here? I mean, obviously from Saudi, are you seeing anything different? And what are you guys doing over there?
Yeah, I mean, the whole banking in Saudi is running through a big transformation. I think it started during the COVID pandemic when the lockdown happened. The regulator relaxed some rules, enabled us to do more sales and fulfill credit card and mortgage requests online. And I think that was a big trigger for the transformation we are having here. But I would like to come to another point, which is understanding customer needs. I remember last year we launched our credit card online banking, a credit card online form. And it's a major project where a smart form, you fill your fields and information, populates, calculates, give you offers, fulfill your credit card. And we measured how long it takes you, the journey. Is it 5 minutes, 7 minutes, 10 minutes? Point is understanding customer. is not an easy. Like to have a 1-minute call with an agent and the credit card is shipped to your doorsteps. I believe the key, I mean, the best definition of a digital bank I've ever read is the bank that is able to dynamically adapt to customer needs. It's not about putting a process online or having a fancy mobile app, but understanding customer needs.
Yeah, I mean, I think that's a great response. I mean, Ashmar, do you want to just come in here? I mean, obviously, Amit's talked about some of the things that those guys are doing in Dubai. Is there anything you guys at Standard Chartered are doing to keep match or keep pace with the growing customer expectation?
It's like it's always nice to sit across the colleagues and debate this out. I think we are all operating in the same market. I think many of the things which Amit mentioned or others mentioned, Standard Chartered has done the same, or I think one notch different. But I think I can just add 2 more areas to it, I think which all of us should understand and relate to. See, when we say online banking, when we say mobile banking, when we say digital banks, these are all different terminologies, technologies, and different ways to operate. And each one of them has a certain pillar on how do we do it. I'll give you a simple example, like my colleague Fahad just mentioned, credit card online we have launched. The launching online credit card proposition is one part. Second part is how will we make sure it goes into the clients. See, when you or me open a website, how this product will go and reach there. And there's a big tool called digital marketing that comes and haunts us over there. So just launching is one step. Then taking it closer to the clients, marketing it back where you are spending time on internet website. So there's a whole philosophy of how you will take these products to the clients. And I think that is where why sales are not literally as clients. It has gone to that level. And the good part is the cost to serve has stayed low because all those clients are being served through the digital channels. We are not asking, phone is your baby, you need to use that, and where all your services will be addressed. And when you go outside UAE, I think then you can see clients who don't have touch phones. They've got those phones which are not technology friendly. That is where then the other platform like USSD comes into play on how do you need to service them and reach out to them and to serve their needs. So I think all these areas are very important to reach the clients and then penetrate further. Thanks, Stuart.
Okay, thank you. I mean, before, I just want to ask one more question of you guys from myself before we open it up to the room. Obviously, we're talking digital value streams. So whether it's customer onboarding, whether it's applying for a loan, whether it's applying for an account, whether it's robo-advising, whatever it may be, I mean, what do you see are the key digital value streams? And I suppose in connection to that is, how do you use that to manage costs? So Ashmar, if I come back to you and ask you that question to start with, what are your priorities in terms of digital value streams, and how are you looking at managing the back office costs of a digital strategy going forwards?
Thank you, Stuart. So I think, one thing is very important for all of us to understand. Through this COVID change, definitely some areas of our P&L, when I say P&L, revenue cost, have been impacted. There is no doubt about that. And it's very, very pivotal for us to create efficiency. Like we touched before, typically banks have been operating database Stuart. I think if you look at the digital world, what we need is our clients to be hooked with us. And to do that, it's very important our digital platform, whatever platform we are using. That platform, one is very customer friendly, and second is the maintenance cost is very customer, and it's high maintenance. Services at least 1/10 of your current service model or even lower, then you can build that platform aggressively. And that platform needs to have hooks for the clients. See, if you use any other client platform, how did Facebook become so big? Why Netflix is doing so well? These are just examples because they have kept innovating their platform. Even now Facebook has become Meta. This is how they keep on engaging their clients. So as banks as well, if you want clients to be with us, our platform needs to have that relationship over there. And I think to create that relationship, the biggest hook is to target their needs. And how can you do that? You have the right product with unique propositions over there, whether it's card, loans, wealth investment products, or whatever solutions you are bring, you need to give more value to the clients. And you can only give more value with low cost. If you're doing the right partnerships, having the digital platform which is working well and easy for you, and it is having the right nomenclature, which is very easy to operate the world. I think if we do that well, then our cost will be lower and ultimately it will help the bank as well as clients to grow faster and touch the value that they need.
Okay, thanks, Ashmar. I mean, Fahad, have you got anything you'd like to extend on the point what Ashmar said?
Yeah, I believe traditional banking, I would say having them in digital is so mature now in all banks. What we will be looking into in the future, what we call lifestyling applications, where I'm not sure if it's right or wrong, but it's coming. Mobile application, banking application will be offering you tickets and flight tickets or showroom tickets. Will be offering you, instead of a loan to get a car, no, it will be offering you car. I believe banking will be embedded in other third parties, bringing them to you, which some people call it lifestyle applications, tracking your expenditure and all of that. I believe this is what we will be focusing on in the future, in the coming years, but traditional banking services, it's so much mature in online banking, at least in Saudi. This is how I see it.
Okay, brilliant. So we're talking streamlining technology, we're talking about partnerships in terms of saving money. Amit, before I open it to the room, what would you say as the retail head in CBD is your biggest cost challenge that you face today in terms of your digital strategy?
I think there are 2 or 3 things which, as a retail banking head, or for that matter for us in the banking industry. So one clearly is, your cost of executing, because technology constitutes, continuous enhancements, upgrades, making sure that you're actually get your tech stack moving. So your ability to invest and manage it cost efficiently. So that's one challenge. I think the other thing, of course, is that, when you scale up the business, you got to make sure that your investments in your headcount of supporting staff is not, a similar graph. It's not the exponential growth as you start growing your business exponentially. So I think you got to just strike the right balance, investing between the right technology, execute the right way for the right outcome, and while doing it at the same time, how do you also balance that you can sustain your growth while these come into play? I think few things that we are doing, and the way I look at it is, it's basically how do you bring the various elements together to create the right impact. So today, the ability to use your institutional data, there's a lot of data available. And when I talk about institutional data, I'm talking data which is off us as well as on us. So you have data which is available outside to you, you have a lot of data available to you. How do you leverage on that? How do you leverage on various, I would say digital tools or capability which are available? So for example, how do you get AI to come into right use for you? How do you then leverage your robotics, for example, on your process efficiencies? How do you leverage on fintech partnerships for the right technology? Maybe it's customer onboarding, maybe servicing. How do you kind of have chatbots to work for you? So I think it's almost like you've got to put the various elements together in such a way that you come across with an optimum balance of creating great customer experience, great value proposition, and while doing it, how do you manage your investments or your costs and investments in such a way that you get the optimal returns? So I think those are the various elements which come into play, the way I look at it.
Okay, thanks, Amit. I mean, for me, listening to these 3 gentlemen, what you can clearly see is that retail never sleeps. It's obviously the old saying that it's a journey, there's not a destination. As you achieve one thing, the next challenge comes. What I'd like to do now, we've got a number of people left in the room, open the floor for any questions. So we've got many years of experience sitting behind us. It's just time to pick their brains and ask any questions that you want. We have one down here. Can we have a microphone down here for this gentleman? Sorry, I haven't got my glasses on, so I can't see. Is somebody coming with a mic? There you go, sir, right behind you.
Assalamu alaikum.
Alaikum assalam.
I just need to know what's your expectations about the impact of Meta World on the banking, especially retail banking in the future. You know that now Meta is becoming a trend and we are expecting a lot of changes, especially on banking industry. Can we just have your opinion about this, Fad, please?
Who would you like to ask it to?
I think it's a panel question, so it's up to you.
Amit, I'm looking at you, buddy.
I'll give you my perspective, and I think it's a very, very interesting question. Obviously, early days, we got to see how this all spans out. But the way I look at it is, I think the key is that what kind of use cases that we, pick up as we, tread this journey. And there are a lot of examples or use cases one can think, because I think what Meta World would enable is for you to get a virtual feel of product and services. A simple example of that is that today, you're on the net when you're talking to an RM through Zoom or through video chat. Meta will enable for you to be in the chat. So imagine you're actually sitting far off, but you're actually virtually connected with your RM sitting right next to you, and then explaining the investments or the propositions to you. That's a very different way of the way you engage today, and far more meaningful for the customers. Similarly, imagine that in future you're actually taking a mortgage and you want to make sure that you understand the property, and in the meta world you actually get a virtual feel of the property that you want to invest in, and hence your mortgage going hand in hand with that. Imagine a scenario where you want to interact with your relationship manager, but you don't want to physically come to the branch, but in the meta world you're actually able to engage with people. So I think there are a lot of use cases which would come up, as we go forward, right from the way you get onboarded, the way you get serviced, the way you actually get managed through the value chain, and we have to build and see how these work out as we go the path. But yes, it's going to be a very interesting thing. I think the key here would be that we effectively would be able to bridge the physical gap that exists, and the reason why a lot of times you still have to go beyond just being on the video, the reason why at times you have to go to branches or you need to engage with people, and how you can actually engage with them virtually in the meta world. I also want to pick up the previous point which was mentioned about embedding in the customer journeys the invisible banking. I think Meta will also take us a step close to that. Imagine that you're actually in a virtual shopping arcade shopping something, and then that is backed by your ability to be able to fund for your purchase or to be able to pay for your purchase. So I think we've got to evolve more and more use cases as the meta world comes into reality. It's almost an ironical statement to on the right use cases which make it easy for the customers. It's just my 2 cents on this.
Fahad,
I just believe Meta will accelerate digital currencies. I mean, I know central banks were thinking about it, whatever, but this is definitely a prerequisite for any transactions in Meta, and that by itself will open a new horizon for all banks. The use cases for digital currencies and local currencies is really will have another impact. So, but other than that, I don't know. The future is big, Sarah. I have nothing in mind now.
Final word from you, Ashmar? You want to chip in?
Thanks, Stuart. So I think, first of all, it's a very good question. And I think I echo the sentiments my colleagues have mentioned. Just to add it up, I think my personal, or what we believe at Standard Chartered is, I guess, digital is there, whether it's meta form or any other form we can talk about it. But digital will need a support for human touch. So that's why we always say digital with a human touch is the future. Now, of course, one can always talk about it. How much meta will play part, how much this advisory will play part, or RM will have a play, or digital currencies, or all the technologies that is coming in. But somewhere down the line, the ratio percentage varies. Simple products will get fully digital, where Meta can take over complex products. Of course, we'll have some advisory part, and we'll continue to have a link on that. And I think regulators definitely have to play a big role in managing all this, because this exposes us to a lot of cyber risk, which we all should be aware of. So that's where regulators comes in, which currencies to operate in, and what to do, how to operate. Future is exciting, and I think that is what keep us hooked, that how these things will change. But definitely, it's going to be good for all of us.
Excellent. Just before I close up, are there any more questions anyone would like to raise their hands? No? Okay. Can I ask the audience to put their hands together and give a big round of applause to the 3 panelists? I think they've done an excellent job. Gentlemen, thank you so much for your time.
Thanks to it. Once again, my apologies for not being able to be there physically present, but thank you for this opportunity. Great interacting with everyone.
Take care. I mean, I hope you feel better soon, buddy. Take care. Thank you.
Thank you. Thank you. Take care, everyone.
Thank you, guys. Thank you so much for that.
All right, we're getting close to the close of day one. A few things I want to go through before we do close and then start talking about tomorrow. First of all, I would like to invite Rajesh from Santoba Tailors onto the stage to give away today's contest prize. This was the prize for today's LinkedIn postings. Santoba is our giveaway partner. Rajesh, are you here? Will you please come upstairs and announce? Do you want to announce the winner or shall I? All right, very good. Somebody needs to do a virtual drum roll. Okay, thank you, thank you. All right, Miss Abrar Al-Houthi from Bank Dhofar, please come up. Please come up if you're here. She's on the phone? Is there somebody who wants? She's here now. Excellent. Please run up to the stage. Congratulations, and thank you for all those LinkedIn postings, too. You're the social media expert, clearly.
Thank you very much. Thank you.
Nice departure from our side. Please visit us.
Thank you. Yes, great. Thank you.
Thank you, thank you. And I'm told there's a second contest tomorrow, a different contest. That's going to be for the person I believe who sees the most of our sponsors. And I'll mention those sponsors again. They're also up here. So a thank you today to all the participants, the panelists, our sponsors for making today a great day. I hope you all learned plenty of things. I love that retail is detail, as well as some of the other things I picked up. Again, their sponsors are listed here, our gold sponsors. They are Exetel and Ameo, Huawei and Foresight, Pure Storage. Bronze sponsors, BML Technology and IST BML, Data Protect, GFT, and Innotech. And we also have our networking sponsor, Open, and our lanyard sponsored Nintech, associate sponsors, FactSet and Data EQ. Thank you for all of them, and please visit the booths outside if you haven't already. So, just talking a little bit about what's coming for tomorrow. We are going to be starting off with the networking breakfast at 8 a.m., and then the sessions start at 10 a.m. I hope to see all of you here, although I know some of you are here just for the day. And I think that is it for today's sessions. Please enjoy yourself. Catch up on your emails, do whatever you need to do. I'll be around here a little longer in case there are questions, or feel free to ask me questions tomorrow. Thank you so much.